in this lesson, we're going to talk about, it's really not a lesson, it's a take-up of a unique sort of exercise. And we're taking it up, one, because sales taxes are new and they can throw some people for a loop. And two, this exercise is really different than the rest. Instead of giving you nice, tidy descriptions of what transaction has taken place, you actually have to figure it out for yourself from a real source document. So, reading the instructions, as you always should, we got Hayden Hair Salon. And I'm going to burn through this pretty quick as I can. And you might only have trouble with, say, a common source documents number 5. You might want to zip through the video till I get there. Or wait, up to you. So Hayden Hair Salon, let's look at our first source document here. And the first one is from Hayden Hair Salon, which means this is our invoice. It's an invoice, which means it's a bill, but it's not our bill. It's a bill from someone else. Someone owes us money, and usually they owe a business money because that business performed revenue, a service or something, sold something to somebody, right? And this is what it's for, some kind of salon service. Here's the amount. This was the total before the tax we had to add. There's the tax we had to add. There's the total they have to pay us. Simple, right? So this must be some kind of accounts receivable. Because if it was cash, it would say paid in cash, or there'd be a cash receipt for the cash sale. So we go back to our journal and notice that if you're asked to do journal descriptions, which you never have to do for me, you would put something like an invoice number as well, what it was for, invoice number, source of this transaction. All we need really up here is the date. So that's April 3rd. So we're going to go April 3rd, and it automatically comes in the right year, and we're going to debit accounts receivable, and we should see our row mark go wrong because we don't have a value in. And accounts receivable would be the total, which we can quickly see is $213.56. And I'm even going to copy that, and I can hold Shift and Control or Command if you're on a Mac, and V for pasting just the value and not the formatting. And that's right. We're owed that much money. And since it's revenue, it's got to be some kind of fees, but no, it must be salon revenue, service revenue. What do I call it? I call it service revenue in this activity. So service revenue is going to be the amount we charged, which is $188.99. So that's $188.99, and that should come up as correct. So the only row left on this first transaction is missing, and that, of course, has got to be the tax we had to charge that we have, in fact, collected and owe to the government. That's $24.57. So we'll go back to our journal and we'll just paste that in on the credit side because it's a liability and liabilities are credits. And that's it. There's the first transaction. Leave a space. Always leave a space. Source doc 2. This is another invoice, but take a look. It's to the same address as Hayden Hair Salon, right? If you notice. So this is actually to us. It's from some company called Electrolux. And this one is a bit tricky at first. It's due immediately. There's no discounts or anything. You haven't even officially learned about that yet. But you will shortly. There's a bunch of stuff. And so obviously, if you worked for this business, you'd have a better idea, or you could ask somebody what this was for. But you can probably figure it out if you stare at this long enough. There's some type of flat service fee for bringing in something. There were hairdryer parts, and there was labor and a new client discount. Why would we be charged for something that needed parts and labor? Well, they either built something for us or they repaired something for us, right? So this is going to be a repairs or maintenance expense, $44.99. So if we go here, and that was source doc 2, if we look up here, it was the 4th of April, so we'll go April 4th. And it's going to be some type of, we've got maintenance expense, there we go, and this was the amount. Right? So that's correct. That leaves us with the tax that they had to charge us. So now we're the customer. That was the tax that we needed to pay, 13% on this service charge, this repair job. So that's going to be HST, and we get it back once we file with the government. So it's going to be HST recoverable debit, and then the grand total of what they charged us and what they had to add on because of the tax is going to be to us an accounts payable, right? Not cash. We're not paying it. That's why we're getting this bill, this invoice. We owe it. And there's no source document that says you've paid it, just that you've gotten the bill for it. So you record it as a bill, as owing accounts payable. And that's just the total amount. And you can add it up with your function, or you can just take the total right here and put it in your journal. Whatever you like to do. Next, source document 3. So source document 3 is a check. and it's a check to Electrolux. And you can tell it's our check because it's got our name on it. It's check number 121, so that's a unique source document number that you could use in a journal description. It's on the 5th. So on the 5th, we're paying this company $548.04. And that should look familiar. And if it doesn't, it's from invoice for this company, obviously, this invoice, 2034. And that was our previous source document. Here it is, 2034. We owe $548, right? That was for the repair job to the hairdryer, to the fancy schmancy hairdryer. So this is a check, which means we're now paying this prior invoice. This was the bill, which gets recorded as an accounts receivable. This is the actual payment, which happened on the next day, April 5th. So we would go April 5th, 2018, we would debit the accounts payable, and we would just simply credit cash for this amount is what it was, right? $548.04. Next one. So the next source document is source document 4. So this is also an invoice, and it's not from us. So this is another bill. So it's got numbers and all the rest of it. It's on the 5th. What is it for? So we got to look down and go, okay, what is this for? This is for, looks like a salon chair, some disinfectant, and hydrogen peroxide. And we got a total, we got tax again. Okay. What could that be for? And here's the next bit of learning. You can have a whole bunch of stuff come on a single packing slip or invoice and not be all for the same thing. So, salon chair is clearly equipment. It's some type of machinery or equipment. And it's not just furniture because it does stuff, right? It moves and it elevates and so on. Disinfectant is you don't directly use it on someone you're doing styling or a haircut for, right? You would use it probably to clean scissors and stuff. But this you do. This is for highlighting or bleaching, right? People's hair. So that's really 3 different things. So salon chair is going to be equipment for $650. Let's do that one first. So this is April. Let me just double check. April 5th, I'd go April 5th again, and I would go equipment if I've got something like that. Yeah, equipment, and it was $650. And it's telling me that that's right. So then what else do I have? Put my journal over here. Source document 4. I got disinfectant. Is there some kind of cleaning or, oh, there is cleaning supplies. Disinfectant, and it was $149.95. So we'll go back to our journal, go $149.95. And that's right. Next one we said was hydrogen peroxide is actually used for highlighting and stuff. So this $199.90, this big bulk order, is probably going to be some kind of supplies. We got salon supplies, right? So salon supplies of $199.90, and that's correct. And all of that is going to be owing because it's a invoice. There's no check, and it doesn't say we paid. So it's an accounts payable to a supplier, but for 3 different things. But we still have tax. They've added tax on this, right? Amounting to $129.98. So that's all going to be claimed all in one go when we remit with the government. So we'll just put that all in one account all at once. So HST recoverable $129, and that leaves the grand total that we owe the company. So it's an accounts payable, and the total is this much, $1,129.83. Voila, next transaction. This one, most people have trouble with because they go, what is this? This is like a TD bank statement. What is all this stuff? Well, banks take their money from you without telling you. They don't send you an invoice. So all of this stuff would have been like a deposit. You would have recorded that when you made it March 9th. The only thing you would not have recorded, because this is all previous month, right? March, would be things you don't know about, which would be these things that happen at the end of your statement period with the bank when they just automatically charge you interest or service charges. And since these are 2 entries that you would want to look for in the future, you have to make them as 2 transactions because they're 2 separate transactions on 2 separate dates. So you needed interest expense, and that was the 22nd, I believe. The rest would have already been entered. So these are the only things you don't know about. So March 22nd would be an interest expense of $273. So March 22nd, and you can do it just like this. Next one, just make sure it's the right date. It would be interest expense, and it would be this much. And it's coming out of the bank account And that's cash, right? It's electronic cash, but that's how the world works now. That's still cash. Right? Cash does not mean paper currency. Not that ours is paper anymore either. But it means cash. And the next one was March 23rd, right? And it was simply just bank fees, $25. So that would be bank, I think there was a bank fees expense. And again, it's coming out of our bank account. So that's cash of $25. And that's how you deal with source document 5, the bank statement. And we just got one left. So that one is the 6th. And yes, there's 2 source documents, but only one is going to amount to a transaction. So before I do this one on the 6th, let's look at the 7th. The 7th is a packing slip from this Canadian appliance company. We've bought pamphlets probably for promotions and lollipops maybe to give kids when we give haircuts, whatever, right? And as you can see, we've ordered 15. They've shipped less. That's why we get a packing slip, to make sure we don't pay more than we actually got when we get around to getting an invoice and writing a check. But there's no dollar amounts on here because it's not a bill. It's just showing that something arrived. So this doesn't trigger a payment. Not every, or a journal entry. Not every source document does. But 6 does. 6 is a cash receipt from our employee for people that came in and paid cash or check during the day. So there were 2 checks, which is the same as cash, treated the same, and a bunch of cash payments. Now the problem with Shelley here is she just put in the total amount paid. No tax. Right? The second difficulty here is that the float in the cash register was $120.75. And we had cash sales total, which has to by law include tax. You can't add it on after the customer leaves. So this has to include tax. And this is the float that was kept, which is more. So the float went up more. So this starting float plus all cash that went in from sales, minus the float they're keeping for the next day, results in a deposit into the bank, a cash deposit of $770.75. Well, that is clearly the cash deposit. That's the easiest part of this transaction. So let's go back here. And this was, what day was this? This was the 9th. So we'll go April 9th. And this is cash, debit first. And it's $770 whatever dollars, right? $770 is what goes in the bank. So 75 cents. Done. Now, our revenue, which is service revenue, right, is going to be not $800. And we're going to have HST payable to figure out as well, because that's the law. And our float changed. So if you keep track of all your money, then you should have an account for petty cash or a float. Our float went up. That's easy too. We had $120.75 and it went up to $150. So it went up almost $30. And if you want to do the math on that, the difference is $29.25. So debit, because it's just like a bank account, except it's you keep it in a box or in your cash register, right? So it went up. So just like when cash goes up, you debit it. We debit this $29.25. That leaves us with the revenue stuff. So how much is revenue? Well, the formula is pretty simple. So let's take a look at this for a minute, because this is an important formula that you would need in multiple business disciplines, not just your accounting course. So if for example, you had, say, if you had some number that you didn't know about and you multiply, in fact, let's start with a number you do know, just as an example. So let's say at $100. And if you multiply that by 1, you'll get $100, right? 100%. But if you need to add the tax, it has to be 13% more, right? So 1.13. And that will give you the amount, the original amount you charged, so the revenue, plus the tax of $113, right? Well, that's the same as saying that your ticket price, as we're calling it in the course, times 1.13 equals the final amount owed. Well, what if we have the final amount that's owed, 800 in this question? And we know we're multiplying by our ticket price, which is unknown at the moment, times 1.13. Well, how would we find this right here in the box? Well, how would we find that? Well, it's simply the mysterious amount we don't know about is equal to the amount we collected divided by 1 plus the tax rate, or in this case, 1.13. And that's how we figure out what our actual revenue is, right? In other words, the ticket price. So that's going to be $800 divided by 1.13, or $707.96. which means our HST payable, which is always 13% of this, is going to be $92.04. That's a tricky question. So remember this formula, right? And if you want it in words, put I just did that backwards. Ticket price is going to equal total owed, or you could also say the amount after tax, right? So the pre-tax amount equals the amount after tax divided by 1 plus the tax rate, 1 plus the rate. That's it. And that is how you finish this activity.